Among the best stock market gainers in the past quarter have been the NBFC stocks. Just sample some of them. L&T Finance up 63%. Chola is up 54%. Chola was, of course, firing up even earlier. Canfin is up 49%. MMFSL 45%. I could go on, the list's up for you. Likewise, all the insurance company stocks are also up between 30 and 40% since April. That's the June quarter. So how will their Q1 results look like? Is that what they're responding to, the stock prices? Joining me to discuss the Q1 expectations of NBFCs and insurance companies is Nishchint Chawate, the Director, Kotak Institutional Equities. Nishchint, good morning and thank you very much indeed for joining me. Actually, you wrote a report saying that as interest rates rise, the NBFC companies actually will see a squeeze on margins. So this quarter, should we expect lower margins? Can you just tell us what is the overall expectation?
Yes, that's right. So I think, as far as growth is concerned, typically you see some element of weakness in the first quarter, which is sort of a seasonal trend. Our sense is that, this is a trend which probably plays out this year as well. But the overall growth momentum, broadly remains strong. As far as margins are concerned, yes, you will see clear margin pressure across most companies. What seems to have happened is cost of funding for most of the NBFCs has gone up anywhere in the range of around 50, 60 to even 100 odd basis points. Remember, we have seen a massive rise in policy rates, and a large part of it has actually been passed on by banks in terms of MCLR hikes. So you will see an impact on the cost of borrowing. On the lending side, we saw that NBFCs raised lending rates in the first 2 quarters of last year. And practically from the third quarter, there has been hardly any lending rate hike. Maybe it is more to do with focus on growth. Maybe it is to do with competition, but whatever. But the fact is that lending rates have not gone up, which is the reason why you would see margin pressure across most NBFCs. Depending on how the product portfolio moves, you would probably have, the impact could be different for different companies. On the asset quality front, collections have been very good in the fourth quarter, probably closer to peak levels. From there, again, seasonally, you would see some weakness. But because of faster growth in denominator, remember last year these companies reported very good loan growth. So your overall GNPL or gross stage 2 ratios will not appear to be that high. So overall, a good quarter. Probably last year when you started, FY23, maybe with NBFCs, there was more bullishness. Companies remain positive, but on a very strong year, they are saying that, let's see how the year goes.
Okay. I was going through your NBFC Q1 margin expectations. It looks like most of them have been able to pass on their increase in costs, right? The cost of borrowing goes up by 20 basis points. The yield on their loans also is going up. So this quarter margins would be good?
No, sorry. I think you're looking at sequential trends. If you're looking at an YOY trend, probably you would see lower NII growth versus, loan growth.
Okay. Loan growth, we already have the initial numbers from Bajaj Finance, MMFSL. They looked, Bajaj Finance was mind-boggling. What is your expectation in terms of Bajaj Finance itself, and even at these elevated valuations, is it a buy?
Yeah, so Bajaj, obviously the loan growth is already out, so, there are no two guesses about it. It has been a good quarter for Bajaj, no doubt about it. And, as the overall macro remains strong, probably you'll see this year also be reasonably strong for Bajaj. The issue with Bajaj is not, really on the business trajectory at this stage, but, what are the valuations really, asking for at this point of time? At around 25 times odd earnings, or for the scale at which they are, the ask rate is very high. It probably means that this company needs to deliver north of 20% growth for next multiple years. And whether at that size you can really deliver or not is an issue, and which is where, we have a reduced rating on the stock. And you'll typically see this where, Bajaj will deliver one good quarter or probably, a couple of good quarters. Investors get excited. But then beyond the point, I think the conversations really start as to, how much can Bajaj grow till for next how many years, and whether the, valuations are rich or are not. So typically, you will see this flip-flop happening in Bajaj.
So what's your pick of the pack? What would you advise your investors to go long on before Q1?
Yeah, sure. So we've generally been kind of saying that a large part of the NBFC rally, probably, some of the best stocks is kind of done. You will see good kind of a compounding in terms of the way earnings growth is happening for these names. We do like Chola, we do like Shriram at this stage. And, amongst the inexpensive one, LIC Housing Finance is also a bet that we are looking at. In the smaller names, the affordable names, Home First, Aavas look good as well.
Okay, actually, I'm going to come back with the major disruptions that are happening in the NBFC space, but that's not a Q1 question. Let me first finish the Q1 question on insurance companies. I know I'm asking you a very big question, but in terms of life companies itself, it looks like LIC is the one that's disappointed a lot in terms of premium earnings. What would be your pick?
Yeah, so see, at the scale at which LIC is, I don't think so you should expect LIC to gain market share. It's fair to expect that LIC keeps on ceding market share to private players, gradually over time. So I think it's a fair expectation. LIC lands up being more of a value pick simply because of the fact that valuations are low, and market is probably not doing full justice to the EV that they have reported. We do like it. We are positive across the board on life companies. We like all the 4 private listed entities with no specific preference, but probably HDFC a tad ahead, ahead of the rest.
Okay, and non-life?
So non-life, there are just 2 names. One is Star, and the other is Lombard. We have a buy rating on Star and add rating on Lombard.
Okay. Well, now let me come to the disruptions in the NBFC space. More the diversified, the old NB. I'm not referring to insurance so much. There are 2 or 3 things happening. There is HDFC, bank now powering up the HDFC Life lending. So it's going to be damn cheap in terms of the cost of funds for HDFC Life, for HDFC, distribution company, the staff that's joined. Do you think that current housing finance companies, PNB Housing, LIC Housing, are going to be, really impacted because of this giant now moving in with lesser cost of funds?
HDFC's cost of funds has been any which ways amongst the best in the private sector, even when they were an NBFC. So yes, there may be some benefit that you get over time when you become a bank, but I think if you look at the overall banking pack as well, look at SBI, look at ICICI Bank, these companies have been much more rational in terms of their home loan pricing than probably, what the scenario was a couple of years back. So keep in mind that, when banks kind of get very crazy in home loan pricing, even their ROEs in this segment comes down. So they have been, over the last couple of years, been fairly rational in pricing. So I won't worry too much about it. If you look at some of the NBFCs that are sort of, still left in the market, probably you've got an LIC Housing which focuses on the prime segment. Maybe a part of the Canfin focuses on the prime segment. But then the rest of the companies are anyways the affordable companies which focus on the different segments. So I won't be too much worried about this.
Yeah, but affordable housing has not been doing too well, and the rates are rising. So do you have any buys in the housing finance space?
Yeah, so affordable housing actually has been doing well, right? You look at companies like Home First delivering 30% plus growth, but Aavas at around 25%, Aptus doing well. So these companies are doing well. They are on a small base, no doubt. But then the business engines are working very well.
Okay. No, I was coming from what the real estate guys told us, that affordable housing is not growing as much as premium. But I agree, we are talking about a different sector, which is housing finance. Okay, the other big disruption that may come, we don't know what shape it will take, is Jio Finance. We only know the record date now. We don't know, how much of capital they will come with and what segments. It looks like it will be consumer from some old speeches of the company. It looks like they will be in consumer finance. Is that a very big challenge even for a giant like Bajaj Finance? Because after all, Reliance will have Reliance Digital. they could package loans along with them, which I think they now do with Bajaj Finance. So Jio Finance, when it comes, is it a big disruptor? And will that make you, therefore, slow down your purchases of the NBFC consumer companies?
No doubt that's the elephant in the room. As you rightly said, we'll have to see how it goes. Our sense is that the initial disruption probably happens, more in the job markets. Probably, there might be some, interesting companies that these guys may look at, taking over. I think that's where probably the initial disruption comes in. Building financial services business takes time. You can throw the ball and see how the asset quality works, and I think it takes time for you to really build a good business. So, it depends obviously on what strategy they take, but it's not so easy to build, lending businesses. So let's see how that goes.
Okay, but vehicle finance is something which they clearly will not get into. You think those companies are still safe? I mean, whatever, to some extent Chola, but more Shriram and Sundaram.
Yeah, I think that's a reasonable expectation. We don't know what obviously they do, but yeah, that's a reasonable expectation that probably they won't get very disruptive. Housing is again a segment in which that the overall profitability is not very high, so they probably may not get very disruptive on pricing. There is not too much you can really do out there. Maybe, the unsecured loans, business loans, I think that's a segment that I would watch out for, how that goes. Especially given the fact that they have relationships with, Jio Marts and all that.
Okay. Yeah, we will have enough time to discuss that when we know more details from Jio Finance. Nishchint, Chawate, pleasure speaking with you. Thank you very much for preparing us for the NBFC results. A quick wrap-up on Bazaar Chartbusters is coming up.